Quest Nutrition is impressively executing on a very difficult strategy within the entire CPG industry, let alone the functional CPG space. Yet, the Simply Good Foods company isn't getting enough credit for it. So I'll touch on some deeper thoughts surrounding that introduction later in this content, but on January 5th of 2022, the Simply Good Foods company did report its fiscal 2022 first quarter earnings for the period ending November 27th, 2021. As I usually do on these quarterly updates, I'll start by running through some of the high level financial data to update you on how the Simply Good Foods company performed recently, but more importantly, I'm going to be using that earnings report, the earnings conference call, and any other kind of relevant publicly disclosed news to provide you some context for expanded strategic commentary on trends within the health and fitness snacking space. For some of my new community members that might not be familiar with the Simply Good Foods company, it is a functional CPG brand portfolio that owns brands like Atkins Nutritionals and Quest Nutrition. So just kind of diving into some of that financial data in 2022 quarter one, they did have revenue of $281.3 million. That was up 21.7% year over year and 8.2% on a quarter over quarter basis. North America was up 24.5% and international was down 27.3%. But core international net sales were actually up 3%. But the European business exit created a large year over year comparative headwind. The total Simply Good Foods company retail takeaway for the 13 weeks ending November 28th of 2021, that increased 18.7% in the US measured channels according to IRI. This is the MULA plus convenience stores. This was slightly below the total nutritional snacking category growth in that same period of 22.1%. The company had gross margins this quarter of 41.4%, which was an increase of 70 basis points year over year and 120 basis points quarter over quarter. While supply chain inflation is hitting the Simply Good Foods company like pretty much everybody else in the CPG industry, it was more than offset by a price increase that they had in favorable product form and retail channel mix due to a higher shopper traffic in brick and mortar. So let's kind of dive a little bit deeper into Atkins Nutritionals. They did have retail takeaways that were up 7.7% year over year. This was above the kind of weight management segment of nutritional snacking category, which overall just saw a growth of 4.4 from a categorical standpoint. Atkins Nutritional bars were up 3.3%, shakes were up 12.9%, and all other formats saw an 8.8% year over year growth. Amazon, which is Atkins Nutritional's second largest customer, was up in the low teens on a percentage basis year over year. The total 2022 quarter one e-commerce retail takeaway growth was slightly less than those measured channels. Now, jumping into Quest Nutrition, retail takeaway for that brand on the tracked channels increased 36.2% year over year. Quest Nutrition outperformed the overall active nutrition segment of the nutritional snacking category that saw growth of 30.3%. Quest Bar's retail takeaway increased 22.8%. Now, the snackier portion of Quest products continued to do well and increased nearly 106% in the 2022 quarter one, driven by robust demand for the chips. Mass and convenience channels represented about 30% of Quest retail sales, and growth in this quarter in those very important sales channels were mass that was up 50% year over year, and the convenience stores were up 40% year over year. Now, e-commerce continues to grow extremely strong for Quest Nutrition at 22% year over year. This is especially true on Amazon, where the Quest bar continues to be the number one selling protein bar on the marketplace. So I want to kind of transition into discussing what I meant in the introduction to this content. Building a nine-figure CPG brand within one product category is tough enough, but doing it across several distinct product categories is largely unheard of. When Simply Good Foods bought Quest Nutrition in kind of late 2019, Quest Bar was 68% of the total revenue. At $310 million that they had in revenue that fiscal year, Quest Bar was essentially like $211 million of its sales. Now, fast forward a little over 2 years, and Quest Bars now are only about 60% of the total Quest Nutrition sales. They had $454 million in revenue in the fiscal year 2021. That means they grew protein bars essentially $60 million in those 2 years. But what I'm more interested in is that they grew the additional categories from $99 million in 2019 to $182 million in 2021. So, what helped this transition for Quest Nutrition? The restricted consumer mobility. So, what was seen as kind of a dagger to most active nutrition brands in the early part of the pandemic was actually a silver lining for the diversification of the product portfolio for Quest Nutrition. When consumers were kind of locked up at home, their snacking occasions changed and kind of all their forms, but especially chips, became more attractive. During this period, the single biggest contributor to Quest Nutrition's increased household penetration has been the growth of its protein chips. The Quest Nutrition chips could have been even a bigger impact to the brand if it wasn't for the lack of inventory due to the outsized growth that's been happening. Once more supply is brought online in 2022, there'll be a huge opportunity for Quest Nutrition to continue extending into the salty snack aisle. COVID-19 effect aided or not, I predict we'll be looking back on this period in a few years and remarking how it catapulted the brand from a single product category leader to a leading multi category platform brand. So I just want to end on some final thoughts and maybe focus on the 2022 outlook for the brand. I don't normally kind of comment on company outlooks, but the Simply Good Foods company is expecting to grow at 12 to 14% over this fiscal year. I would say that's a pretty conservatively strong estimate, but there's two areas that really could help them boost revenue 15% or more. The first is kind of around if there will be a weight management super cycle in this current quarter. Now, the Omicron might be delaying this a little bit, but I do see consumers trying to get their weight back in check. You're finally starting to see the mass media report on extra weight being correlated to the higher risk of serious viral infection. This is something we all knew in kind of the health and fitness community, but mainstream individuals were force fed a different story that created false hopes around quick fixes. Kind of read into that storyline however you'd like. Now, the other thing is around back to work. Will those percentages increase? Now, the expectation for this hasn't really met the reality. But if in person work increases, it will boost the buy rate of the Atkins Nutritionals brand. That should give the support needed to help the comparatively outsized brand growth that's happening at Quest Nutrition. If you enjoyed this YouTube video, please hit that like button to support me. Also, help me get to my short-term goal of 2,000 subscribers by hitting the subscribe button. I'd love to see you join me on this journey, but we need to fix the fact that more than 70% of you that are watching this right now are not subscribed to my channel, and that really makes me sad. But just want to thank you for tuning in, and I'll see you on the next one.